The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. We got Jobs Wednesday. You got 130,000 jobs added. Beating the estimates, we get revisions for 2025, which brings the net jobs added to about 185,000 for the entire year. And let me get you my charts. Apologize. Thought you had my charts. There they are. And we kick things off with the 10-year. And yeah, you talk about some moves, man. You got the 10-year right now. Negative by 15 ticks. We got yield movement across the board right now as the possibility of rate cuts get sucked out of this market. And we got the 10-year at 4.2 right now. Right back to 4.2 on the 10-year, negative by 15 ticks at 112.02. We have higher yield, dollar strength. You spike all the way above 97. We're back to 96.90 right now on the dollar. We take a look at the yield curve. And we are higher across the board. The 2-year, which is most reactive to the Fed, the 1-year as well. How about 7 to 8 basis points on the 1-year and the 2-year? The 10-year up about 5 basis points. The 30-year up about 4 basis points. But when you're talking about the Fed, you're talking about the 1-year and the 2-year. Where's the overnight lending rate going to be for the next 12 to 24 months? And the market's saying, you know what? This just changed the scenario. And hey, you know, you take the politics out of it. We have an unemployment rate of 4.3%. We got 130,000 jobs added, and we have inflation that is still well over the benchmark. You can argue that it's going down, okay, but you start putting up jobs numbers like this. Don't even think about a Powell cut, okay? But you start putting up jobs numbers like this with inflation still well above the target of 2%, if that's their target, as they say it is. All right, let's go over to the probabilities of these rate cuts real quick, and you can see it in the yields. Yesterday, the odds of a cut, 80% at the next meeting. They're now 6%. You go out to April, the odds of a cut yesterday, by April, 36%. Today, 20%. And you go out to the new Fed chair's first meeting, which is June 17th, Mr. Warsh, 41% chance we don't get a cut by then. 41% chance. Whew. That number yesterday was 24%. A week ago it was 42. A month ago it was 27. We are in a period of extreme volatility. When you talk about yields, it's going to impact everything. And I think this is just going to be par for the course as we go forward. This data was delayed. Okay. It's February 11th. We're getting January jobs data that's almost 6 weeks old. And so, yeah, the data marches on, but we're going to provide some real volatility, man. You got the S&Ps up by 40 points. NASDAQ 100, we're up by 0.8% or 201 points, 25,419. The Dow coming right up to the highs we saw yesterday morning, up 248 points, up 0.5%, 50,519. And the Russell, quite a spike, up by 0.9% for the Russell, up 25 points at 2713. Bitcoin, even Bitcoin catches a bid there at 9 o'clock. Still negative by $700 on the session, 68,160. We jump over to crude, 65.66 for crude, up $1.70 right now. We jump over to the dollar. So with higher yield, you get some dollar strength up to 97.20. We're back to 96.88. And you check out gold right now, up to 51.44. Pretty remarkable, right? From 7 in the morning up until that spike at 8:30. From 51.44 down to a low of 50.36, almost $110, and since then we're back at 5,100 right now. Silver with quite a bid from where we were last week. Silver was just up above $86. We're at 86.12 early this morning. You spiked to below 83.50, and right like that, we're back almost up by $5 on silver at 85.20 right now on silver. All right, let's talk about some of these job numbers. Now, Treasuries, yeah, strong U.S. labor data resets the Fed cuts bets. And you better believe it, man. You start putting up jobs numbers, 130, 140,000 jobs added, even if you get revisions. They are big numbers, man. And looking at the number we had on the actual revisions, I believe it brought the net number down for the year to something like 185,000. I'll pull that number out after the break, but if that was the number last year and you're talking about adding 130,000 jobs, you got unemployment at 4.3%, and it's across the board. Okay? Black jobless rate, 7.2 from 7.5. White jobless rate, 3.7 from 3.8. Hispanic Latino, 4.7 from 4.9. Asian jobless rate, whatever reason, 4.1 from 3.6. Quite a number. All very healthy low numbers. You'd like to see them all even across the board, but man, big time numbers. Yeah, there it was, 181,000. So revisions trim the 2025 payroll gains to just under 200,000, and that's for the entire year, folks. So you could get revisions this year. All right, everything became political against Biden on the revisions. Nonetheless, net revisions, 2025, 181,000 jobs added. But guess what? The market looks forward, doesn't look backward. 130,000 jobs added, and they're asking this morning, how much are we going to cut if this market is adding 130,000 jobs a month with an unemployment rate of 4.3% and inflation still running above target? And Mr. Warsh is going to have his hands full. We'll see how he handles this. But right now, the market's saying, no, we're not going to get that cut from Powell with these types of numbers. So you fast forward to June, and, pretty remarkable right now in terms of where this market's pricing in, that even in the first meeting of the next Fed chair, a 40% chance that we get no cuts by then, right? We get no cut in March, no cut in April, and Warsh shows up for the June 17th meeting, his first meeting, and there's a 40.5% chance right now that he says no cut. We're going to get a lot of data in between now and then, folks. All right? We'll see if it continues the trend that we got this morning for January, and that's a 6-week delay. Okay, we are getting data that is almost 6 weeks old, right, from the beginning of January. All right, let's check out some of the big dogs this morning. NVIDIA, $3 higher in the pre-market. Look at this acceleration. Right up back into the highs of yesterday morning. NVIDIA trading at 191.59. And yeah, Kraft Heinz, check it out. Change of plan, folks. They're not breaking things up just yet. They're going to wait to trim the fat, right the ship, and then they're going to break things up. And boy, you talk about, so we're down to 23.31. Okay, you're down almost 6-7%. You hit 22.86, down almost 9% at one point this morning. They are pausing the split to focus on shoring up profit before they do. Yeah. So they took over January 1st, made the decision to temporarily halt the split to concentrate on bolstering profitability. Not the right time to push out to the public, right? Basically. They're going to invest $600 million in marketing, research, and development, improving its products and reducing some prices. We'll talk about that, but Kraft Heinz this morning down by $1.70 to 23.35. Markets in the green. We're coming back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. In the green, and yeah, we check back in on yields right now, whether it's the yield, the dollar, the markets, and no real reprieve. That was quite a pullback, as in 15 ticks lower, just like that on the 10-year. We're back at about 4.2%. We had higher price and lower yield coming into these numbers, and that's reversing today. Look at the engulfing we got going on yesterday's candle. Lower price, higher yield coming at you. Now, the dollar got quite a bounce, and we've given it up, though, which is interesting. Right? Even with the higher yield, the dollar's right back to where we were yesterday. Okay, right back to where we were. We were lower pre-market, but we're at 96.86. We're going to talk to our man Teddy Kegstad, author of the Tiger Forex Report, at 40 past the hour. We'll talk some currencies with Teddy coming up. Some action in the dollar today, sitting at 96.87 on a hot jobs number. And they're taking cuts out of this market right now. We jump back to Kraft Heinz. So they're going to focus on growth, and they're going to pause the separation, okay? The goal of the planned split had been to siphon off lagging grocery staples into a new entity, expected to generate reliable cash flow while giving the company's top-performing sauces and spreads. You into sauces and spreads? Well, you're going to have to wait for that new company to be separated. Yeah. Organic revenue dropped 4.2% in the fourth quarter, a bigger decline than analysts on average had expected. So maybe the growth part of it, nonetheless, all right? Be careful of this one, man. You check out the performance of the S&P versus this company going back to 2018. Even since they announced this split, the company's down like 12% this year. Let's see. That's not true. The company had gained 2.7% this year, but since the deal had been announced, it's lower. There you go. Yeah. Down 11% since the end of August. And this is really unwinding the deal of the merger in 2015 that they put together that's been an abysmal failure for all other terms. But yeah, they're in trouble. And maybe this is their turnaround. But the whole point was to let the winners shine and pull the stable ones off that aren't really growing, right? Well, geez, even with that plan, you're in trouble. All right, let's take a look at metals. Gold contract. And go back to a daily. Gold right now up by $70, up 1.4%. And folks, just be careful in this market. We're seeing record light volume right now. Record light volume on these bounces. Okay? You go back to when gold was at 46.70, which is just 5 days ago, folks. Okay? It's the 6th. Friday. Yeah, there it is. 171,000 contracts. Folks, many of you follow the metals markets. Okay, look at this daily volume. 118,000 contracts, 101,000 contracts yesterday. Now, you're going to get a big day today. We're off to the start to 76. It's Jobs Wednesday. Okay, we got volatility and yields. You're going to get a big day in the markets, and maybe this is where you catch a bid with some meaningful volume. But, folks, you just traded from Friday's low to where we were yesterday on record thin volume, at least versus anything we've seen recently, right? How far back on this chart do you got to go to get 2 days that came in 120,000 or less contracts? 120,000 or less back-to-back days. We have not seen a day. And I'm not trying to exaggerate everything. It's just, and you can trail higher on thin volume, folks, right? But boy, you should be paying attention to the volume. And what can I find on here? I got 1 day at 94,000 contracts back here, right? I can't even find a day. What do we have yesterday? 101,000 contracts yesterday on gold and 118 the day before. Okay. There's only 1 day I can find. There's 118 back almost a year ago in April. Okay. We don't see light volume days like that, folks. That's not trading higher on dramatic buying. It's not. You can argue there's no more sellers, which, yeah, the market can drift higher, but same thing on silver, man. Yesterday, silver does 51,000 contracts. Day prior, 65. December 8th, you did 60. What's that, the half day before Thanksgiving, maybe? You did 56, okay? And just look at the drop-off. Not as pronounced on platinum, but it's there as well. Yesterday, 11,000 contracts in platinum. There's no buying to lift this market right now in metals. You can say there's no selling either, but there is no volume right now on these bounces, folks. And sometimes when there's less players in the market, you can get dramatic swings. So volatility can be a trader's best friend. We have very little volume in the metals right now, which could actually exacerbate some of the swings going on, but it is not a sign of strength, folks. All right? And I'm not screaming hell and high water's coming, but, I deal with price and volume. And this is not a resounding area to buy into right now, in my opinion. Okay? We have no strength, and every single day we get less volume in these equities. Today's going to be a different story. So we'll pay attention to the volume today and see what comes in. Gold up by $60 right now. And hold on to your hats, folks, because it's Jobs Wednesday. And we got yields spiking at 4.2% right now. The dollar's at 97, but realistically, the dollar could have caught a bigger bid than this, right? We're just back to almost where we were yesterday afternoon. Dollar was at 96, 92. We're at 97 right now. You were well below that pre-market. But there's been a recalibration of rates, and you better believe it if you're talking about 130,000 jobs added. Quite a number. Unemployment rate going down to 4.3%. All right. What else we got going on in this market? Well, this is an interesting one as we have yields rocking around. So this one was out early this morning. FHA mortgage demand rises as borrowers face affordability challenges. Now, you can usually get, better interest rates. The average contract rate on a 30-year fixed mortgage, unchanged at 6.2. That's 74 basis points higher than a year ago. and these are such small numbers, right? Application volume increased 0.3% last week, so it's basically unchanged. 6.21% is the number. To refinance a home rose 1% for the week. FHA purchase and refinance applications increased, helped partially by the FHA rate declining and remaining 20 basis points lower than the conforming. You can get better loans at the FHA, folks, if you qualify. You can. Okay, there's different limits over what you can borrow in terms of the maximum you can borrow for an FHA loan, etc. But yeah, and so it would make sense, no matter what, that you'd have FHA rising. And, put these home builders on your charts, folks. Okay, it was quite an acceleration yesterday. I've been talking about it. You accelerated lower last week on the news that they're potentially under investigation. But pay attention to the price and volume, because we're getting some buying. How about that expansion yesterday? Lennar up to 119, and KB Homes as well, up to 62. We're coming back for the opening bell, folks. Stay tuned.
Instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. That's right. It's showtime, and we got markets open, and we got the S&Ps up by 0.6%, up 43 points, and going to be an interesting Wednesday as we digest a hot jobs number, 130,000 jobs added in January. You get net revisions for 2025. Total jobs added for the entire year 2025, 181,000. That's not what the market's worried about, though. What are you doing right now? Don't tell me how you're doing in 2025. January last month, January being last month, 130,000 jobs added. Unemployment rate, 4.3%. Okay, big numbers, man, across the board. Now, we're going to talk about renters in a second. I had one more in here. All right, we will talk renters. We'll talk some of those numbers as well. We talk craft. All right, so we're talking about housing, right? We have the policies up there talking about maybe we won't allow institutional investors, right, to hold all the single-family homes. But boy, it's always the loophole. The devil's in the details, okay? And the new executive order that would bar big investors from acquiring single-family homes, well, if you're building them to rent, no problem. Isn't the whole problem that nobody can buy a house? We don't need houses that people can rent. And yes, we need affordable rents, right? So that's where you get it. But man, it's like the playbook is so easy when you look at this, okay? The executive order, now, whether this is legal or against muster or what it even means, right? Large investors can't acquire single-family homes, okay? But guess what? There's an exemption that allows them to build homes for renting out. These build-to-rent housing communities are a growing niche, and check out the numbers, right? These home builders, like the ones we just talked about, okay? Lennar, D.R. Horton, KB's in there as well, I'm sure, okay? Even Bill Pulte, surprising, right? Had a small business of buying newly built rental homes before he joined the administration. Now, the build-to-rent exemption may seem at odds, because this is about people being able to afford a house, right? From a policy perspective, build-to-rent communities make sense because they're improving the available of quality rental housing. Okay. Last year, check this out, 66,000 homes in build-to-rent communities were completed. In 2021, when you could actually sell houses with where rates were, right? Only 11,000. That number's 66,000. And you can't blame them, folks. Okay? You look at the numbers in terms of what a mortgage costs, where rates are, right? The median home value, you add in a mortgage at 6.5%, 6%, whatever it is. Now, one more in here. Almost all of the big Wall Street landlords are either cutting deals with home builders to buy newly constructed homes in dedicated rental communities or setting up their own construction firms. Yeah, Invitation, American Homes for Rent, Blackstone. They're all just cutting deals with the home builders. Now, the home builders love this. Invitation owns 80,000 rental homes. And folks, these companies are abysmal to deal with in Florida, okay? It's just the worst of the worst as if you're in the rental market, you're dealing with straight up Wall Street, okay? They're running you like a number. Everything is difficult for whatever it is, okay? That's the feedback that I'm giving you. But here's how it goes. Today, landlords make up only a small segment, okay, 1 to 3% of all single-family rentals in the country. What's going on is where I am in Florida, folks, huge areas, right, where the market just got decimated. Central Florida, okay, when the bubble burst, right, when you had all these properties. It's why my dad started a real estate fund back in around, 2008, 9, 2010, right? This area just got decimated. It was one of the worst areas hit. So investors came in, they bought those single-family homes, etc., right? This number, of course, it takes place. They do it all. What are they talking about? Yeah, Blackstone took Invitation Homes public in 2017. They fully exited the investment in 2019. $7 billion is what they made. They got back into the business 2 years ago. Tricon Residential, okay? And what they talk about is that the builders love this because what you do is you lock in that you can sell off a huge portion to Wall Street as renters. I'm trying to get the one quote that says that exactly as I go through it, and it's a great point. All right. Nonetheless, you're going to see this one pop up, and you should. Yeah, and then you have Invitation Homes just last month acquiring a build-to-rent developer that specialized in constructing single-family rental homes And you need affordable rentals, and you need homes that can be built for people that can buy them. And that's the head share. But boy, you look at this type of a loophole, quite a loophole. And I'll pull up that quote. I'll take a look at it at one of the breaks because, boy, the numbers that they are doing here in terms of what Wall Street is already buying from these companies, forgive me for scrolling. I thought I'd get it. But hey, you know what? Not fundamentally, charting-wise, these home builders look strong. Okay, they do. You have all this volume up here in this acceleration from November. You take a look at them on a weekly. That's what a sign of strength looks like. You pull back on light volume. Okay, all the volumes to the upside in these equities. Lennar right now, negative today, but you're well off that low of almost 100. KB had a nice day yesterday. Same thing. You get a lot of volume, a lot of buying. Earnings season, yeah, we traded lower. These home builders, risk-reward wise, I like the setup, folks. I do. All right, we go back to Kraft Heinz on their numbers, down by about 4.2%. Get a little bit of a bid on the opening bell, 23.88. We keep our eye on yields. A little bit of a recoil from that first move. We're back to 112.06, but you got lower price, you got higher yield. We check in on the dollar, 96.99, and gold sitting at about 5,085 right now. A little bit of stronger dollar, a little bit higher yield, weighing on metals from that 830 number, 5,085 right now. Jump around to some of the leaders. Tesla up by 2.3% right now. Microsoft, they trade lower on the open, down by 0.6%. Amazon down by 0.3%. Not Nvidia, up by 1.7%. You talk about it, man. These chip stocks. Look at Micron, up by 6.4%. Broadcom, up by 0.8. Oracle flat after quite the acceleration the last couple of days, down by 0.7% right now for Oracle. Take a look at the heat map. Yeah, we got a lot of diverging areas. Healthcare, a lot of red here in the healthcare barely. All the tech stocks higher though. Look at this, right? All of them. Chip stocks. Google, even positive by 0.1%. He looks for some red. Palantir, Billy, App loving as well, but we got a lot of green. Interesting, not so much in healthcare right now. Healthcare. Whew. One of the biggest areas saving this market right now when you talk about jobs, folks. Yeah. Healthcare, 82,000 positions. Social assistance, up 42,000. Those two combined, 124,000 jobs added. We added 130, right? Healthcare and social assistance. All right, folks, stay tuned. We're coming back with Teddy Kegstad. We're going to be talking some currencies. We'll talk some commodities on a big action day. We're coming back with Teddy. Stay tuned, folks.
Focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps holding on to most of those gains, up by 31 points. Markets in the green. We get the dollar right at 97 right now. And right now, folks, as we do each and every Wednesday at 40 past the hour, we're going to talk to our man Teddy Kegstat. You can check out Teddy's outstanding weekly report, folks, the Tiger Forex Report. You get a new issue every Monday. Updates throughout the week when warranted. You gain access to an archive webinar. Teddy's gotten in there as well. You can sign up, folks. It's $97 a month. It comes with a 30-day money-back guarantee. And Teddy's also got a couple great webinars under the Services tab. Capitalizing on Time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Teddy's written a book on candlestick patterns, folks. 2 great webinars. Check those out as well. Teddy Kegstat, happy Jobs Wednesday, man. Good morning.
Yeah, we got some crazy action going on between the U.S. dollar yen, the euro, or the pound. Which one do you want to talk about?
Well, you do such a great job that, I always focus, even myself, right? I look at the dollar, the media reports the dollar, you break down those individual pairs so much, man. We got some action with yields today, but maybe if you could tell me what you, on a day like today, because I was jumping through them, getting ready to talk to you this morning as well, and just the action. We got action across the board on these pairs, and how do you look at a morning like this, Teddy? What do you focus on when you look at the action that we have right now? And boy, we got some action.
Sure. Well, you know what? I think right now you have to look at it like, we had a good trade overnight, and then obviously this is a news reactionary thing. So right now the U.S. stock market just opened, not even 15 minutes ago. So I think you have to let it digest for the next half an hour to an hour. Let's see what kind of if we start to see a trend with the stock market, then I think you might start to see a trend with the dollar. I would key off of the high and the low today in the euro and also the pound versus the dollar today, especially. I think if you get a breakout either way, for instance, if you get a breakout to the downside, the bears are going to break out to extend the lows, I think, pretty well. To the upside as well, I think if you get a rally and the bulls can get if they can breach that, current daily high today, I think you might have an explosive little trade there. I think you're going to have a lot of stops. You know what I'm saying? At both those levels right now. Right now, we're it's an outside day and we're in the middle of the range for the most part. The U.S. dollar yen, that's another case where I think the bears have the edge no matter what. I think you got a good shot at seeing newer lows today than you do newer highs.
Yeah, and that yen, quite a move even. We talked last week, of course, and boy, from where we were Sunday night at 157, you were at 152 pre-market. Right. For those following the yen in particular, and, I appreciate the take even on today, but longer term, what do you think about, we just came back and tested where we were almost in January, as I mentioned, Sunday night at 157, and I know you include this one in the Tiger Forex report, but what are some numbers you're looking at maybe as we go forward on that yen?
I'm definitely bearish on it. In the past 3 days, I know it's been very, very steep as far as a market reaction. So the question is, did we put a top in a month and a half ago, or are we getting ready to follow that bull trend? I don't think the bull trend is here. Even if let's just say, the expectations now a rate cut's not coming until after June. I still think the new Fed chairman is going to pop it. This is the first meeting he has. Regardless of whether that happens, that's still 4 or 5 months away, as far as I'm looking at, so it doesn't matter in the short run. So with that being said, I think that you're going to probably see neutral strength in the dollar, and especially weakness versus the yen. I think right now you got the yen trading at 153.67, pretty much around there right now. Trading at 153 is a good area. Remember, 150 even is the benchmark that the BOJ wants. I've been saying that I think no matter what, before this quarter is out, we're going to be trading around the 150 area, even touch down to maybe 147.5 for a bounce and find a little low there, and start to chop around there for a month or so. And I think right now we're on target for that. I'm going to go with the trend. I'm going to look at the high that we set in on Monday. That was a very big rejection. That was we made a higher move high with a very big outside selling day. It was a bearish engulfing line sell signal. In the short run, if this move is done, then the low of today should be the low. If it's going to be bullish, I would say we're not going to take out the low. If we take out the low of today, I would be, if you're going to try and, I think you're trying to catch a falling knife. I see us getting down below 152 then if we take out the low of today.
And that's kind of nice. I'm speaking myself personally. When you have trades, at least, and we're all going to be wrong sometimes, but at least right? That's you got your back against the wall, man. You got a plan. This is what it looks right now. And you break those levels, then we got a different scenario. But it's quite a bounce we got going on. I hear you. Mm-hmm. Hey, what about crude? Crude right now, reacting a bit, but we were sitting at. Yeah, look at this bid we're getting now. My goodness, even as I talked to you, Teddy, I was getting ready for you this morning, and we were trading at 64 and change. We're at almost $66, 65.70, 71 right now. What do you think of crude?
Yeah, I still think it's a rally to sell. I think it's going to be a liquidity trap. I just don't see it being sustainable at this level. So I mean, I just really don't. I mean, if there was a fundamental that came into play, that was really, really bullish, I would change my mind. But right now, I just don't see, with everything that's coming online, for that to be sustainable. I think I'd be very cautious. I think a spike high is definitely imminent if it even gets much higher than it is right now.
And this area, I was looking at this earlier, technically, it's amazing how this area was an area of support. You broke through that areas, and we had lows back there, and it's like many years. 2023, 2024, your low was 65.27. We're at 65.69. So we'll see if that area turns into a little resistance.
Well, 75 is the magic number, isn't it?
As well.
Right, Tommy?
Hey, what do you think about the metals market? I got to ask you, of course. We got dollar jumping around, metals, volatility calming a bit. And, I know you've preached caution. I agree with a lot of what you're talking about, on this bounce right now. We got a little bounce going on, 5,073 in gold. But what do you think about these price levels still where we're at on some of these metals, Teddy?
I still think it's very, very toppy right now. I really do. So, and especially with the way the volume is and things like that, I think that my really big take on why the metals are where they're at is I think you had the rotation out of Bitcoin. I think all the money that was dumped out of Bitcoin was going into the metals last year, to be quite honest with you. I think it was a rotation. So, and eventually I think you're going to start to see people trying to take some profits out of it. I can't see it being, I know everyone sees gold going to like 6,000, 7,000 or whatever, but it's beyond irrational for where gold value should be at. It just seems like it seems like such a bubble to me, and it still seems so derivative driven. If you get my meaning as far as why it is where it's pricing at. Right
those
now.
Charts, I appreciate preaching caution, because you look at some of those charts and pretty parabolic at certain times, especially silver, but even gold, man. And it's been quite a run. We're still sitting at 5,000. You mentioned Bitcoin. What do you think about crypto, man? Any comments on crypto? Talk about risk reward. Everybody, I think, knows the risks at this point. But what do you think? What do you think about investors looking to dabble on quite a pullback in crypto?
Well, I think especially because you have so many people trying to say that the central banks and the banks should start buying cryptocurrencies and Bitcoin to help lift the market. that alone is a sell signal right there. First of all,
I was like, please don't say that's why we should buy it. That's what I was thinking, right? I was saying, man, I heard a joke yesterday or a couple of last week saying central bankers aren't going to buy something that Michael Saylor from MicroStrategy controls the flow for. And it's kind of the same thing. Beware. Teddy, great information as always. Folks, check out the Tiger Forex report. And Teddy, appreciate it, man. We'll talk to you next week. Thanks so much as always.
All right, bye-bye.
Thanks so much. We'll come right back, folks. Great info from Teddy. Check it out.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 29. NASDAQ up by 151. Russell. Talk about a give back. These days are always exciting, man. Keep your spikes up on your back, folks. Check out that reversal on the open, right? Look at the Russell plummeting right now. From 2720, you're down by almost 40 points from where we were right after that number. You're below where we were prior to that number right now. S&P's holding up pretty strong, up by 29 points. Let's take a look at that Russell. Whew. Healthcare. Look at this. And all the jobs are coming from healthcare. Okay, as I mentioned, okay, I ran into those numbers quickly prior to the break, but it was like 82,000 in healthcare and a 42,000 number when you talk about services of some assistance services. I jumped around. But yeah, You're talking about 124,000 of the 130,000, but not today on healthcare. Look at these numbers weighing down the Russell in particular. Jump over the S&P 500. Oh, sorry, that's the S&P 500. Nope, that's the Russell. Forgive me. We jump over the S&P 500. Chip stocks yet again. What would the market be doing without chip stocks? Energy stocks higher as well. We got crude at $65. You got the energy stocks higher. The industrials doing well. Caterpillar up by 4%. All right, let's check back in on that gold contract. Look for that volume today, folks. All right, we're going to get a bump. You're at 82,000 contracts. You only did 101,000 yesterday. You only did 118 the day before. Remarkably light volume. Silver. What are we at? 35,000 contracts right now for silver. Silver up by 353. We check back in on yields. And yeah, 10-year sitting at about 4.2%. And we'll finish it up with $1. 96.96 right now on that dollar. All right, folks, thanks so much for tuning in. Stay tuned. Basil Chapman, he's in the Tiger's Den. He's getting ready for that Tiger Technicians Hour coming up next. Steve Rhodes with the Trader's Edge live at 11 o'clock. Fast Market from the Schwab Network at noon. Larry Pesavento live at 1 o'clock, folks. And I'll be back at 3 o'clock live as well. We got a little selling on this market. Stay tuned, folks. Basil Chapman coming up right now. Thanks so much. Have a great day, folks.